The financial world is buzzing with renewed optimism. Stocks surge and the dollar weakens as investors anticipate Fed's next move. On April 14, 2025, a Reuters photo captured pedestrians strolling past a stock quotation board in Tokyo, Japan, reflecting the market's recent fluctuations. And what a day it was for investors. The Euro Stoxx 600 climbed 0.6%, fueled by a renewed appetite for riskier assets. But here's where it gets controversial. Fed Chair Jerome Powell's comments left the door ajar for potential rate cuts, sending shockwaves through the market. Powell's dovish tone sparks market movement. In a surprising turn of events, Powell hinted at the possibility of further rate cuts, stating that the Fed's balance sheet reduction might be nearing its end. This unexpected shift in tone caught the attention of investors, who now anticipate additional cuts by December. As a result, the U.S. dollar weakened, losing 0.2% against a basket of currencies, while the yen and the Australian dollar made impressive recoveries. Global markets react. The impact of Powell's words was felt worldwide. European shares rose, with French stocks soaring 2.4% after LVMH, the luxury giant, reported stellar earnings. Nasdaq and S&P 500 futures also climbed, indicating a positive start for Wall Street. However, the market's fragility was evident, with safe haven gold breaking records, surpassing $4,200 an ounce for the first time. Trade war turbulence. The escalating trade war between the U.S. and China added to the market's volatility. President Donald Trump's announcement of additional tariffs on Chinese goods and the subsequent retaliation by Beijing have investors on edge. The situation is a delicate dance, as Trump considers severing some trade ties, while both countries impose new port fees. Economic strain and political relief. China's economic data revealed persistent deflationary pressures, with consumer and producer prices falling in September. Meanwhile, in France, political gridlock was averted as Prime Minister Sébastien Lecornu pledged to delay pension reform until after the 2027 election. This news sent French bond yields tumbling, with 10-year yields reaching their lowest level since mid-August. A global snapshot. The Euro Stoxx 600 up 0.6%. French stocks jumped 2.4% post-LVMH earnings. Dollar slipped 0.2%. Nasdaq futures rose 0.8%. S&P 500 futures advanced 0.6%. French 10-year yields fell to 3.37%. Oil prices, Brent crude down 0.2%. U.S. crude eased 0.1%. And this is the part most people miss. Amidst the market's ups and downs, what does this mean for the average investor? Is it time to embrace riskier assets? Or